Hello, welcome guys. So today I'm going to show you an analysis on how to enter a trade based on using the liquidity purge on the buy side with the sell side, as well as the breaking market structure that combines with a fair value gap and for you to get an entry. So follow through. So what we're going to do, first of all, we are going to drop into a much more lower time frame. So we can look at the minute 15. Try to see if you can get a setup basic on that particular day. So if you look at the 14th of September, first things first, we have to identify the Asian range that typically begins from 3 a.m. up to 7 a.m. Right, so we identify the highs and the lows during this particular time. That's done. So the next thing is to identify the Judas swing, right? So the Judas swing normally happens between 7 a.m. up to 9 a.m. So from 7 a.m. up to 9 a.m. The false move, right? The false move was significantly bearish. As the move went down, it was targeting the low of the Asian range, right? And once that was done, liquidity was taken out, right? And now that will form a very significant structure or perspective of where we anticipate the price to go if on this particular day we were bullish, right? So what we will do is use a trend line for that, so that I'll be able to just highlight a specific region, not the whole of it, right? So we can take that low to that low accurately, and so I think this we can remove the time difference. So take this low, key significant point. This is sell side liquidity that was taken out. All right. Once that happened and the price swept the key lows or the previous lows and took up liquidity and started rallying up, that is something that we want to see, and we are looking at to see. And it's important to note that we are in the London kill zone. So if we would have identified this as 9 a.m. up to 12 a.m. that will be our London kill zone. So as the market was rallying up, we would identify a key breaking market structure region that we will anticipate price to come and retest to, right, for us to get a fair value gap. So on the minute 15, this would have been typically our breaking market structure. what we'll do, we'll just extend this line. Move it up to there. Right, so it has the BMS. Side, you can call this sell side liquidity. Should go bottom, and that is okay. So we're looking for fair value gap that it's going to present itself once this setup comes into play. And fair enough, if we were to base this setup on the 15-minute time frame, we would have gotten fair value gap at this particular point. Right? So by the setup coming into 11:45, just 15 minutes prior to the end of the London kill zone, that means our trade will have escalated up to the New York kill zone. So what we would have done is just to identify the kill zone time zone. So it's between 2 p.m. to 5 p.m. If you were to look for a long position here, so that means we're taking from the 50% of the fair value gap. If we are to target a certain area, the market went up to 56 pips, right? And stop loss could be the last swing low, right? The last swing low for this movement. So if we were to target key areas, if we were to look left, basically we would have targeted areas of interest from our entry. There's a significant high that had buy side liquidity. We also have this region here that was of interest. No prior fair value gap into these spaces that could represent itself, as well as maybe we would have been targeting on the higher side, but price did not go to that level on that particular day. So what it means that if we were to target up to that level, so price would have given us a movement of about 49 to 50 pips, and that's a good strike rate because it would have given us a risk reward of 1:3. That is on the minute 15, and if we were to move on the lower time frame, allow me to change this just a minute. 14th of September. If we were to move on the lower time frame, we would have expected this is how the chart would have looked like. So basically we would have gotten a much more lower entry in this sense. By being sell side on this side, we would have been looking for a possible bracket market structure, and also close scenarios of sell side liquidity, and here it presented itself, right? So we had a good example of a sell side liquidity on this particular day. The break-in market structure came into play at this particular region because that was the last lower high. All right, here to identify that as BMS, and fair value gap region would have been this particular region, right? So almost 50%. Basing on that, with that is where we would have gotten our entry. So if we were to target looking for long positions, this is where we would have been, right? So entry stop loss will have been much more tighter at 15 pips, right? So as we're starting to target key levels, this is where we will scooped up to 37 pips, and up to this region was 53 pips. I'm sure the price would give us a much more elaborate one. So if we were to target that high, price rose almost up to 90 pips. So the key thing here, guys, is the lower the time frame, the lower the tighter your stop loss will be, and the higher chance of having a big risk to reward ratio. Like this one got up to 1.5. So it means that once it got to 1.3, what you can do, you can close your partials and let the markets run in terms of your stop loss as you move your stop loss above break even and up to a certain position, for example. This would have been a good setup day for you to scale in the markets. So guys, it's as simple as that. The market can present a very good sell side position, and we're looking for a breaking market structure. Further breaking market structure, we look for fair value gap region that presents itself within the kill zones. Right, so this can be your bread and butter setup, and as we have targeted the lower hanging fruit. And remember, this one also coincides with the optimum trade entry, because if we were to look at this particular level, price actually bounced up to almost to the 61.8 level, right? So that would have been one of our key areas if we were to enter using the optimum trade entry. So that's it, guys. So up to next time, I wish you good luck and good trading.